Welcome to Market Analysis, and I'm here with Solomon Kariuki, AIB Access Research Analyst, to just understand how's the market doing. Solomon, welcome to the show.
Thank you, Maina.
It's been some time, and it's good to see you here.
Yeah.
I want to start with a quick question. What's the state of activity in the market now that you see?
I'll say the market at the moment is quite low.
Yeah.
We have seen moments of slow uptrend or slow trading for various reasons.
Yes.
Because there have been some prevailing macroeconomic challenges. Investors are fearful given to what is happening in inflation.
Yes.
Foreigners are also fearful of the currency. So we have seen a little bit of a slowdown in market trading.
Okay.
In comparison to last year, to a time like this.
All right. And I know we have varying sectors, but I would want you to pick one or two and tell me, some of the sectors that are still quite vibrant.
I think, surprisingly, we have seen the agricultural sector quite do well this year. We have seen counters such as Williamson gaining plus 50% to date. We have seen counters such as Kafshoro also gaining plus 50%. And we have also seen counters such as Kakuzi and Sasini also do well.
Okay.
So one of the reasons why the sector is doing well is because they earn in dollars.
Yeah.
So their revenue has been coming in dollars, and the depreciation, I would say, has been a positive for them because that means they're going to get more earnings.
Okay.
And then that has translated to shareholders who have been getting dividend returns.
Okay.
So notably, the agricultural sector is one of the most consistent in terms of dividend payments. It has been seen this year. And of the 6 listed counters, 5 of them are dividend paying. So that has been one of the key drivers of the good performance in the sector.
You're right. In fact, we just had an interview with Kakuzi, and they paid very good dividends. Let's go directly now to some of the losers and gainers. And I'm seeing in terms of a week-to-week look at some of the top gainers are Khan General, Unga Group, Longhorn, Williamson, Sanlam. Anything that you see, any company that you see, and any reasons why?
I would think, as I highlighted, Williamson. The dividend yield was very attractive for investors.
Okay.
And we saw the share price move from around 150 to a high of around 260.
Yeah.
So that was very positive for investors.
Okay.
So for the other counters, mainly it's because they are coming down from a low base. They had not been doing well for the last few months. In the last 3-4 weeks, investors have started picking up.
Okay.
I would say it's investors who are seeing opportunities in them. It's not something really fundamentally driven. But more so it's coming from some speculative trades here and there, because if you look at the volumes, they're not that big.
Okay.
So it's just investors who are seeing an opportunity to get in, and that is what is driving the share price up.
Okay. Let's talk about the losers as well. I see some of the companies are Eveready, Samia, Olympia, Stanbic, but interesting enough, I also see Safaricom. I think people are rallying, hoping it can now shoot up and the likes. I don't know, what are your observations?
So for Safaricom, you have to keep in mind that they had a book closure on 28th of July.
Yes.
So at that point, then I would think that investors are looking to cash out, especially after booking the dividends. So in recent months, Safaricom has been a preferred counter for speculators. So who are looking at it, they're waiting for it to get to 14. You buy, and then once it gets to 18, you sell.
Yeah.
And so that coincided with the book closure.
Okay.
And that can also be skewed by those are huge trades that happened at the end of July that maybe triggered the sell-off that you have seen at the moment.
Okay.
But all in all, Safaricom remains a good buy. The fundamentals are strong.
Yeah.
We have seen growth in the M-Pesa business. We have seen some shops in Ethiopia, but we expect them to overcome them in the long term.
Yeah.
And we have also seen some good business in the data unit.
Okay.
So those are some of the key drivers that we see are going to continue driving Safaricom's growth. And should continue giving value to shareholders in the long term.
Yeah. One of the investors asked me, can you ask Solomon whether Safaricom is ever going to get to the 30s that we saw some time back? What are you going to tell him?
Hopefully, yes. Yeah. In my analysis, my target price at the moment is 23.71.
Okay.
I had to be a little bit conservative because of what is happening in Ethiopia. There is the conflict in the Tigray region. So the conflict in itself is delaying outlay into those areas. And we have also seen the talk of another license, a land license.
Yeah.
So that would mean, as per my estimates, the entry of a land license then would slow down some of the growth numbers that you have seen.
Okay.
Yeah.
The indices are quite low. And what does this mean for investors from your perspective?
I'd say for investors is the best time to come in.
Yeah.
Because if you look at the NSE overall, price to earnings ratio for the whole market, it's around It's been trading at around 6-7 times. And if you look at the historical, it's around 11-12. So you see the market is trading at around 40 to 50% discount.
Yeah.
So that means, in general, it's a good opportunity for investors to buy in.
Okay.
The key thing is for investors to look at the right opportunity, because the market has good and bad side of it.
Yeah.
So it's focusing on the good, and also looking out at the risks that could turn it to the bad. So there are some still individual stories in there that are quite positive, and there are good value plays within the listed companies. So there's still opportunity for investors to come in.
Yeah.
More specifically, if you look at sectors such as banking, if you look at the book value valuation, the price to book, for the last 1 year for the banking sector has been around 0.6 times.
Yeah.
Compare that with frontier peers who are trading at 0.9. So for a foreign investor looking to come into the Kenyan market, then at least there is some level of discount there compared to other frontier peers.
Okay. I don't know. I want to put you on the spot again, because you've mentioned about the fundamentals at Safaricom and what you're predicting. Someone could be saying, can you mention maybe 1, 2 more, something on that? So any other best bets for your end?
I would say banking.
Yeah.
We are expecting half-year results from tomorrow.
Yeah.
So we expect some good print on that.
Yeah.
They have been doing well. Yes, with challenges here and there in terms of lending. The lending environment has not been very conducive. So we expect some slow growth in the loan book.
Yeah.
And at the same time, they have been allocating their money to government security. So you find that the yield curve has really steepened. Is a positive and a negative. A negative for historical bond holdings, because it means it's a negative for them in terms of price valuations for those bonds. But then it's a positive for recent acquisitions for bonds.
Okay.
And then at the same time, you find that the FX shortage has created arbitrage opportunities for banks. So you find that they have found opportunities to grow the forex trading income. And you also find that the reversal of more bank to mobile charges then is also a key positive for them. So they will be able to balance out the decline in interest income from lending with the growth in FX trading income, and the commissions that they charge, and also the income from government securities.
Yeah.
Another negative we expect from the banking sector is we expect increased provisioning, impairment provisioning for loans.
Yeah.
Something we noted in the full year results for FY22 is that perhaps the reduced provisioning we saw in FY22 and some bit of 21 came in a bit early. We expect them to reverse that and go back to aggressive provisioning like we saw in 2020.
Okay.
And so that could eat into some of their profits.
Okay.
But all in all, we expect some positive results. Interim dividends maybe from NCBA and Stanchart, probably ABSA.
Yeah.
And probably another interim dividend from Stanbic in Q3.
Okay. Speaking about government bonds and the likes, there has been quite some interesting percentages that have really attracted people here. But there's also this whole transition to the new platform that has been put up by the CBK. What are your observations, and what would you tell investors?
So I'd say for the new CBK platform, the Dow CSD, from where we sit, it's in the long term is a very positive platform, mostly for retail investors, because you find in the last few years there have been a lot of interest on investing in government securities, mostly from retail investors, and that was very evident in the issuance of Makiba some years back. So the new platform will enable retail investors to participate without much hassle or without much issues, like walking physically to your bank or walking to the CBK banking halls. So it will enable retail investors to participate, and also diaspora investors. They have been locked out of the government securities market. So in the long term, we see that increasing uptick for government securities, mostly on the retail side. And so that would mean that the government will have to balance between being conservative in what they are accepting, because from where we see it, the market is quite aggressive. So remember, the inflation has been up. Government debt sustainability questions have come up.
Yeah.
So that means investors are looking for a premium from the market or from the government.
Okay.
And that's why you find that the yields are going up. So then that means that investors now will be quite aggressive, because they're trying to protect that yield rate of return. Trying to look for the premium to cover for the increased risk from the government and also from the prevailing macro challenge.
Okay. Yeah. All right. And finally, let's talk about the dollar. There's been some shocking news here and there, and speculations of where it's headed to. What's in your review?
from where we sit, we do not expect the challenges facing the dollar to go away now, probably in the near term, but in the short term, they're going to persist, mainly because there have been pressure in terms of import demand. So Kenya being a net importer means that we are demanding more dollars than we get from our exports.
Yeah.
So our exports being agriculture, tourism, and diaspora remittance, they have not been performing well. Remember, in developed markets, they also have their challenges. In Europe, in US, there is inflation, there is job losses and all those.
Yeah.
So that has been eating into how much diaspora remittance is coming back home. That is our biggest source of dollars. And you also find that global prices for coffee and tea have also had challenges.
Yeah.
Our key export markets for tea, that is Sudan, Egypt, and Pakistan, have their own issues. So then that has reduced the amount of exports we are earning from those key commodities.
Okay.
On the other side, the imports led by energy. I think in today's paper we saw that there was a huge importation of food.
Yeah.
Staple food, the rice and the maize, the sugar.
Yeah.
And then there is also, the fight of government to government oil. It's leaking in the next 2 months.
Yeah.
So we expect a lot of dollar demand on that. So that should put in an added pressure on the shilling against the dollar.
Okay.
So in the near term, we don't see any relief on the Kenyan shilling. And at the rate at which it's depreciating, it's around 1.2-1.3% per month. We expect it to close at around 150 to 153 by the.
Okay.
So what you have noted is also the widening of the spreads between what the CBK has quoted and what you're going to find in the local commercial bank.
Yeah.
So you find that CBK quote is around 143 and your bank is selling at 150. So there is a spread of around 7 to 10 shillings, depending on the bank. And that is going to persist because of the more of the challenges in the FX interbank market that we have observed in the for the better part of this year.
Okay.
So our outlook for the local shilling is not tidy.
Okay.
We are a bit conservative.
Yes.
Being a little bit negative. But then, pursuing the efforts from the government and maybe from the private sector, then we could see some moments of relief here and there.
Okay.
Yeah.
Wow. Thank you so much, Solomon, for your time. That's it right here on the Trading Bell. I hope you enjoyed the conversation with the Kakuzi CEO and, of course, with Solomon himself right here. See you for now. Bye-bye.